Bitcoin's journey: how 14 years of evolution shaped the $1 trillion cryptocurrency market. Bitcoin, the first decentralized digital currency, has undergone a transformative journey since its inception in 2009. Originally introduced by the pseudonymous Satoshi Nakamoto, Bitcoin has evolved from an obscure concept into a significant financial asset, contributing to the establishment of a dynamic cryptocurrency market valued at approximately $1 trillion. This report chronicles the key milestones in Bitcoin's history, explores the themes that have emerged throughout its development, and reflects on the broader implications of its rise. Key milestones in Bitcoin's evolution. 1. 2008 to 2009, the birth of Bitcoin. In October 2008, Satoshi Nakamoto published the Bitcoin whitepaper titled Bitcoin, a peer-to-peer electronic cash system outlining the principles of a decentralized currency. The Bitcoin network was launched in January 2009, marking the beginning of what would become a revolutionary shift in the financial landscape. 2. 2010, first real-world transaction. On May 22, 2010, Bitcoin's first known real-world transaction took place when Laszlo Hanyecz famously purchased 2 pizzas for 10,000 BTC. This event demonstrated Bitcoin's potential as a medium of exchange and laid the groundwork for its use in commerce. 3. 2011, emergence of alternatives. The rise of alternative cryptocurrencies, altcoins, began in 2011, with Litecoin emerging as one of the first to build upon Bitcoin's technology. This diversification indicated a growing interest in blockchain technology and the potential for various applications beyond Bitcoin. 4. 2013, price surge and public awareness. Bitcoin reached a significant milestone in late 2013, crossing the $1,000 mark for the first time. This price surge attracted considerable media attention, leading to a broader audience and increased speculation. The surge was driven by growing awareness of Bitcoin's potential as an investment and a store of value. 5. 2014, the Mt. Gox incident. 2014 was a pivotal year for Bitcoin, marred by the collapse of Mt. Gox, the largest Bitcoin exchange at the time. The exchange filed for bankruptcy after losing hundreds of thousands of Bitcoins to hackers. This incident highlighted the vulnerabilities within the cryptocurrency ecosystem and raised concerns regarding security and regulation. 6. 2015, introduction of Ethereum. The launch of Ethereum in 2015 marked a significant advancement in blockchain technology, introducing smart contracts that expanded the potential applications of blockchain beyond simple currency transactions. This innovation paved the way for decentralized applications (dApps) and further spurred interest in cryptocurrencies. 7. 2017, mainstream adoption. In 2017, Bitcoin witnessed another meteoric rise, reaching nearly $20,000 by December. This surge signaled Bitcoin's acceptance into mainstream finance, attracting institutional interest and prompting discussions about its viability as a store of value akin to gold. 8. 2020 to 2021, institutional investment. The years 2020 and 2021 brought unprecedented institutional investment into Bitcoin, with companies such as MicroStrategy, Square, and Tesla purchasing significant amounts of Bitcoin for their balance sheets. This shift legitimized Bitcoin as an asset class, and its price soared to an all-time high of over $60,000 in April 2021. 9. 2022 to 2023, market correction and regulation. After reaching its peak, the cryptocurrency market experienced significant corrections in 2022. Bitcoin's price dropped sharply, leading to discussions about regulation and the need for a framework to govern cryptocurrencies. Governments around the world began to formulate policies to address the challenges posed by digital currencies. Common themes and insights. Decentralization and security. A recurring theme in Bitcoin's journey is its decentralized nature, which is fundamental to its identity. Unlike traditional currencies controlled by central banks, Bitcoin operates on a peer-to-peer network, making it resilient to censorship and government interference. However, this decentralization also poses security challenges, as evidenced by incidents like the MTGOX collapse. Investment and speculation. Bitcoin's transformation from a niche digital currency to a recognized investment asset has been remarkable. Initially embraced by tech enthusiasts, it has since attracted retail and institutional investors alike. The narrative surrounding Bitcoin's potential as a digital gold has fueled speculation and investment, leading to significant price volatility and media coverage. Challenges and regulation. As Bitcoin gained popularity, it faced various challenges including regulatory scrutiny, security vulnerabilities, and market volatility. Governments worldwide have grappled with how to regulate cryptocurrencies, balancing the need for consumer protection with the desire to foster innovation in the financial sector. Differences between sources. While various sources highlight similar milestones in Bitcoin's evolution, they may emphasize different aspects of its journey. For instance, some sources focus on technological advancements such as the introduction of smart contracts with Ethereum, while others delve into economic implications such as the impact of institutional investment on Bitcoin's legitimacy. Additionally, some analyses may include personal stories of early adopters and investors, providing a human perspective on Bitcoin's growth. This diversity of viewpoints enriches the understanding of Bitcoin's journey and its significance in the broader context of finance. Conclusion. The journey of Bitcoin over the past 14 years has been marked by significant milestones that have shaped the cryptocurrency landscape. From its humble beginnings as a theoretical concept to becoming a trillion-dollar market, Bitcoin continues to evolve, facing challenges and opportunities as it seeks to solidify its role in the future of finance. As the cryptocurrency ecosystem matures, Bitcoin remains a driving force, inspiring innovation and sparking debates about the future of money. Its impact on traditional financial systems and its potential to reshape economic paradigms will likely continue to be a topic of discussion for years to come. Bitcoin's journey over the past 14 years has indeed been extraordinary, marked by significant milestones that reflect both its evolution and the broader development of the cryptocurrency market. However, amidst the common narratives about Bitcoin's rise, several counterintuitive aspects emerge that challenge conventional wisdom regarding its trajectory, adoption, and implications for the financial system. Counterintuitive aspects of Bitcoin's journey. 1. From niche to mainstream and back. While Bitcoin has been heralded as a revolutionary financial instrument that has transitioned from a niche digital currency to a mainstream asset, the reality is that its adoption has been far from uniform. Many retail investors initially flocked to Bitcoin during price surges, but the subsequent market corrections often deter broader adoption. The cyclical nature of its popularity suggests that its mainstream acceptance is fragile, heavily dependent on speculative interest rather than intrinsic utility. 2. Volatility as a strength and weakness. Bitcoin's notorious price volatility is often cited as a barrier to its adoption as a currency. However, some proponents argue that this volatility is a sign of a healthy dynamic market, reflecting the growing interest and speculative nature of cryptocurrencies. This duality complicates the narrative. While volatility is seen as detrimental to its use as a stable medium of exchange, it simultaneously drives investor engagement and media attention, fueling further speculation and interest. 3. Decentralization versus centralization trends. Bitcoin's foundational principle is decentralization, yet several trends suggest a movement towards centralization within the ecosystem. For instance, the dominance of a few large exchanges and wallet providers can create a centralized point of failure, contradicting the decentralization ethos. Moreover, institutional investment, while legitimizing Bitcoin, may also lead to a form of centralization where a few entities control significant portions of the market, posing questions about the long-term implications for Bitcoin's original decentralized vision. 4. Regulatory scrutiny as a catalyst for growth. Regulatory challenges are often viewed negatively, seen as hurdles to innovation and adoption. However, they can also serve as catalysts for growth by providing clarity and legitimacy to the market. As governments and regulatory bodies establish frameworks for cryptocurrencies, this could lead to increased institutional investment and public confidence in Bitcoin, countering the narrative that regulation stifles innovation. 5. Technological evolution versus user adoption. The introduction of technologies such as the Lightning Network aimed at improving Bitcoin's scalability and transaction speed has been impactful. Yet user adoption remains a significant challenge. Many users are still hesitant to adopt these new technologies due to a lack of understanding or perceived complexity. This gap highlights a counterintuitive reality. Technological advancements do not automatically translate to increased user engagement or adoption in a market often driven by psychological factors and user experience. 6. Environmental concerns as a double-edged sword. Bitcoin mining's environmental impact has sparked extensive debate, leading to calls for greener alternatives. While this has prompted some to criticize Bitcoin, it has also spurred innovation in renewable energy solutions within the mining sector. Companies are exploring sustainable practices that could ultimately enhance Bitcoin's reputation. Thus, rather than being a purely negative aspect, environmental concerns can drive technological and operational improvements that benefit the cryptocurrency ecosystem. 7. Public perception versus actual use cases. Bitcoin is often perceived as a speculative asset or a tool for illicit activities. However, its actual use cases extend well beyond these stereotypes, including remittances, savings in inflationary economies, and even charitable donations. This discrepancy between public perception and the reality of Bitcoin's utility can hinder its broader acceptance and integration into everyday financial systems, showcasing a counterintuitive barrier to its growth. 8. Cyclical nature of interest. The cyclical interest in Bitcoin is often misinterpreted as a sign of its instability. However, this cyclical pattern may reflect broader economic trends and investor behavior rather than a fundamental flaw in Bitcoin itself. As economic conditions fluctuate, so too does interest in alternative assets like Bitcoin, suggesting that it may serve as a barometer for investor sentiment rather than a standalone investment thesis. 9. The illusion of control. Many investors believe they can time the market or control their investment outcomes through strategic buying and selling. However, the reality is that Bitcoin's price movements can be influenced by external factors beyond individual control, including market sentiment, global economic conditions, and regulatory news. This illusion of control can lead to poor investment decisions, demonstrating the unpredictable nature of cryptocurrency markets. Conclusion. Bitcoin's 14-year journey has revealed a complex interplay of factors shaping its evolution and the broader cryptocurrency landscape. While the narratives surrounding Bitcoin often emphasize its revolutionary potential and growth trajectory, counterintuitive insights highlight the complexities and challenges inherent in its adoption and integration into the financial system. Understanding these nuances is crucial for investors, regulators, and users as they navigate the evolving world of cryptocurrencies. Bitcoin's journey over the past 14 years has been marked by pivotal events and transformative trends that have shaped the current landscape of the cryptocurrency market, valued at around $1 trillion. While many may focus on the high-profile milestones such as price surges or institutional adoption, several overlooked aspects are crucial for understanding Bitcoin's broader significance and implications for the future of finance. Overlooked aspects of Bitcoin's evolution. 1. The role of decentralization. While the concept of decentralization is often highlighted, its profound impact on financial sovereignty and privacy is frequently underestimated. Bitcoin's decentralized nature eliminates the need for intermediaries, allowing individuals to transact without relying on banks or financial institutions. This aspect is significant because it empowers users in regions with unstable banking systems or authoritarian regimes, enabling financial inclusion and autonomy. As the global economy faces disruptions and inflationary pressures, the ability to hold and transfer value independently may become increasingly vital. 2. Technological innovations and their ripple effects. Bitcoin's technological foundation, including the proof-of-work consensus mechanism, has broader implications beyond cryptocurrency. The environmental concerns regarding energy consumption are often debated, but what is often overlooked is how these challenges have spurred innovations in energy efficiency and alternative consensus mechanisms. The ongoing discussions about Bitcoin's energy use have led to increased interest in renewable energy sources, particularly for mining operations, showcasing how Bitcoin can inadvertently drive advancements in green technologies and energy infrastructure. 3. Cultural and societal shifts. Bitcoin has catalyzed cultural and societal changes that extend beyond finance. The rise of the HODL mentality and the emergence of communities centered around Bitcoin reflect a shift in how individuals perceive wealth investment and community engagement. This cultural phenomenon is significant as it challenges traditional investment paradigms and fosters a sense of belonging among users. The psychological and social dimensions of Bitcoin adoption, such as community building, shared values, and collective action, are often overlooked in favor of purely economic analysis. 4. Regulatory evolution and its implications. The narrative surrounding Bitcoin's regulatory challenges often centers on the fear of government crackdowns or the potential for stifling innovation. However, the evolution of regulatory frameworks can also be seen as a sign of maturity in the cryptocurrency space. As governments and regulatory bodies seek to establish clear guidelines, this can lead to increased legitimacy and trust in Bitcoin as an asset class. The emergence of regulatory clarity could pave the way for broader institutional adoption and integration into traditional financial systems, a potential that many fail to fully appreciate. 5. Bitcoin as a hedge against macroeconomic instability. While many view Bitcoin primarily as a speculative asset, its role as a hedge against inflation and economic instability is significant, particularly in times of global crisis. The COVID-19 pandemic and subsequent economic downturns have highlighted Bitcoin's potential as a store of value. This characteristic has drawn parallels with gold, but with the added benefit of portability and divisibility. As inflation concerns grow globally, the narrative around Bitcoin as digital gold is gaining traction, which could influence future investment strategies and asset allocation. 6. Impact on financial literacy and education. Bitcoin's rise has ignited a growing interest in financial literacy, particularly among younger generations. As individuals seek to understand Bitcoin and the broader cryptocurrency landscape, there is a parallel increase in demand for knowledge about personal finance, investment strategies, and economic principles. This shift towards financial education is crucial as it empowers individuals to make informed decisions in an increasingly complex financial environment, fostering a culture of self-directed learning and awareness. 7. Global inequities and access to financial systems. The promise of Bitcoin to democratize access to financial systems is often discussed, but the nuances of how it can address global inequities are overlooked. In countries with limited access to traditional banking services, Bitcoin provides an alternative for savings and transactions. This aspect is significant as it highlights the potential for Bitcoin to serve as a lifeline for individuals in developing economies, enabling them to participate in the global economy and protect their wealth from local currency depreciation. Conclusion. Bitcoin's journey over the past 14 years is not just a tale of price volatility and technological innovation, it is a complex narrative intertwined with cultural, societal, and economic implications. Many of the critical aspects of Bitcoin's evolution, such as its role in promoting decentralization, driving technological advancements, fostering community engagement, and influencing regulatory landscapes, are often overlooked in mainstream discussions. Understanding these dimensions is essential for grasping the full significance of Bitcoin and shaping the future of finance and society at large. As Bitcoin continues to evolve, it remains a focal point for discussions about financial sovereignty, technological progress, and the potential for systemic change in the global economic landscape. For most valuable points for in-depth analysis and discussion on Bitcoin's journey, 1. Decentralization and its implications for financial systems. The decentralized nature of Bitcoin as established by Satoshi Nakamoto is a cornerstone of its identity and functionality. This point warrants extensive exploration, particularly in how decentralization differentiates Bitcoin from traditional financial systems. Decentralization not only enhances security by removing single points of failure but also fosters a sense of autonomy among users. Analyzing this aspect can lead to discussions about the broader implications for financial sovereignty, the potential for disintermediation in banking, and how decentralized finance DeFi is reshaping the economic landscape. Furthermore, the challenges posed by central authorities in regulating decentralized systems could be examined, including the potential for censorship and the balance between innovation and oversight. 2. The evolution of Bitcoin as an investment asset. Bitcoin's transformation from a niche digital currency to a recognized investment asset is a significant milestone in its journey. Initially viewed with skepticism, it has garnered interest from both retail and institutional investors, particularly during periods of price surges. This evolution raises critical questions about the nature of money and value in the modern economy. In-depth analysis could focus on the factors that have driven institutional adoption, the role of Bitcoin in portfolio diversification, and its performance compared to traditional assets like gold. The psychological aspects of investment behavior, including the impact of media narratives and public perception during price volatility, could also be explored. 3. Regulatory challenges and market volatility. The regulatory landscape surrounding Bitcoin is continuously evolving, and its impact on market stability is profound. The significant price corrections observed in 2022 to 2023 highlight the vulnerability of cryptocurrencies to regulatory announcements and market sentiment. An analysis of the regulatory approaches taken by different countries, ranging from outright bans to proactive frameworks, could provide insights into how regulation shapes market dynamics. Additionally, discussions could delve into the implications of regulatory clarity for investor confidence, the potential for innovation stifling, and the balance between consumer protection and fostering a conducive environment for technological advancement. 4. Technological innovations in the future of Bitcoin. Technological advancements have played a crucial role in Bitcoin's evolution, with the introduction of features like the Lightning Network aimed at addressing scalability issues. Evaluating these innovations can lead to discussions about the future viability of Bitcoin in a rapidly evolving digital economy. Considerations could include how these technological changes influence transaction speed and cost, as well as their implications for Bitcoin's usability as a medium of exchange. Furthermore, discussions might explore the potential for Bitcoin to coexist with other blockchain innovations such as Ethereum smart contracts, and how this interplay could shape the competitive landscape of cryptocurrencies. By focusing on these 4 points, an in-depth analysis can provide a comprehensive understanding of Bitcoin's journey and its broader implications for the cryptocurrency market and financial systems as a whole. Each point opens avenues for rich discussion on the interplay of technology, economics, and regulation in shaping the future of digital currencies. 1. Tulip Mania 1630s. Often cited as one of the first recorded speculative bubbles, tulip mania occurred in the Netherlands during the 1630s. The price of tulip bulbs soared to extraordinary levels, driven by speculation and the belief that prices would continue to rise indefinitely. At the peak, some rare bulbs were sold for more than 10 times the annual income of a skilled craftsman. However, the bubble burst in 1637, leading to a dramatic collapse in prices and significant financial ruin for many investors. This historical case illustrates the dangers of speculative investing and the volatility inherent in markets driven by hype rather than fundamental value. 2. The South Sea Bubble 1720. This financial disaster involved the South Sea Company, which was granted a monopoly on trade in the South Seas by the British government. The company's stock prices skyrocketed as investors were lured by the promise of immense profits from trade. Speculation and rampant optimism led to inflated stock prices detached from the company's actual economic performance. When the bubble burst later that year, it resulted in widespread financial panic and loss, significantly impacting the British economy and leading to reforms in financial regulations. The South Sea bubble serves as a cautionary tale about the risks of speculative fervor and the importance of transparency in investment. 3. Dot-com bubble 1995 to 2000. The late 1990s saw the rise of internet-based companies, leading to a surge in stock prices for tech firms regardless of their profitability or business models. Investors poured money into startups with little to no revenue, driven by the belief that the internet would revolutionize business and society. The bubble peaked in March 2000 when the Nasdaq Composite reached an all-time high. However, by 2002 many of these companies had failed and the market crashed, resulting in massive losses for investors. The dot-com bubble highlights the risks associated with speculative investing in emerging technologies and the importance of due diligence in assessing business viability. Future outlook, predictions for Bitcoin and the cryptocurrency market. As we look ahead to the future of Bitcoin and the broader cryptocurrency market, there are several key trends and predictions that can be anticipated based on the evolution and current state of the industry. The following predictions consider technological advancements, regulatory developments, market dynamics, and societal shifts that could shape the landscape over the next 5 to 10 years. 1. Increased institutional adoption. Institutional interest in Bitcoin is likely to grow, driven by a combination of factors including inflation, hedging, diversification of assets, and a growing understanding of cryptocurrencies as a legitimate asset class. More companies may follow the lead of early adopters like MicroStrategy and Tesla, incorporating Bitcoin into their balance sheets. Additionally, traditional financial institutions may develop dedicated cryptocurrency services, including custody solutions and investment products, making it easier for institutional investors to access Bitcoin. 2. Regulatory clarity and frameworks. As governments around the world continue to grapple with how to regulate cryptocurrencies, we can expect the establishment of clearer frameworks. This regulatory clarity will likely foster a more stable environment for Bitcoin and other cryptocurrencies, encouraging broader adoption. While regulations may impose certain restrictions, they will also provide legitimacy, potentially leading to increased institutional participation and consumer protection measures. 3. Technological improvements and Layer 2 solutions. The Bitcoin network is expected to see ongoing improvements in scalability and transaction efficiency. Layer 2 solutions such as the Lightning Network may become more widely adopted, allowing for faster and cheaper transactions. These advancements could enhance Bitcoin's utility as a medium of exchange, making it more competitive against traditional payment systems and altcoins. 4. Integration into financial systems. As Bitcoin matures, its integration into existing financial systems is likely to deepen. Central banks may explore the issuance of central bank digital currencies (CBDCs), which could coexist with Bitcoin. Additionally, Bitcoin could increasingly be integrated into payment systems, allowing for seamless transactions alongside fiat currencies. This integration would further legitimize Bitcoin as a viable currency for everyday transactions. 5. Emergence of Bitcoin as digital gold. Bitcoin's narrative as digital gold is likely to strengthen as more investors view it as a hedge against economic instability and inflation. This perception could drive demand from both retail and institutional investors, positioning Bitcoin as a key component of diversified investment portfolios. As global economic uncertainties persist, the appeal of Bitcoin as a store of value is expected to grow. 6. Environmental concerns and sustainable practices. The environmental impact of Bitcoin mining has come under increasing scrutiny. In the future, the industry may see a shift toward more sustainable practices. This could include the use of renewable energy sources for mining operations and the development of more energy-efficient consensus mechanisms. As societal awareness of climate change grows, Bitcoin's ability to address these concerns will be crucial for its long-term acceptance and legitimacy. 7. Global economic shifts and the rise of DeFi. The rise of decentralized finance DeFi could significantly impact Bitcoin's role in the financial ecosystem. As DeFi platforms become more popular, they may offer innovative ways to utilize Bitcoin within decentralized lending, borrowing, and trading environments. This could enhance Bitcoin's functionality and attract a new wave of users who are interested in leveraging their Bitcoin holdings for additional financial opportunities. 8. Cultural acceptance and norms. As Bitcoin becomes more ingrained in popular culture, its acceptance as a means of payment and investment is likely to rise. Increased media coverage, education, and grassroots movements advocating for cryptocurrency adoption could lead to a cultural shift where Bitcoin is viewed as a normal part of financial literacy and personal finance. This cultural acceptance will further drive adoption rates, especially among younger generations. 9. Market volatility and speculation. Despite its growing legitimacy, Bitcoin will likely continue to experience periods of significant volatility. Speculative trading will remain a factor influenced by market sentiment, macroeconomic trends, and technological developments. Investors will need to navigate this volatility, weighing the potential for substantial returns against the risks associated with price fluctuations. 10. Globalization and financial inclusion. Bitcoin has the potential to enhance financial inclusion, especially in regions with limited access to traditional banking services. As mobile technology and internet access expand globally, Bitcoin could serve as a valuable tool for individuals in developing countries to participate in the global economy. This trend may accelerate as more people recognize the benefits of decentralized currencies. Conclusion. Bitcoin's journey over the past 14 years has laid a foundation for a transformative future in the cryptocurrency market. While challenges remain, the trends outlined above suggest a promising outlook for Bitcoin and the broader crypto ecosystem. As technological advancements, regulatory frameworks, and societal attitudes evolve, Bitcoin is poised to solidify its position as a cornerstone of the financial landscape, influencing how we view money and value in the years to come.